Where do investors find the next big growth story? Often, it's not in the headlines. It's in the less covered corners of the market, where smaller companies with big potential are quietly building the future. Today, we're exploring one such area, the Singapore Exchange's small cap sector. We'll look at the powerful economic trends shaping this market in 2025 and dive into 3 companies that each tell a unique story about growth, resilience, and strategy. Before we dive in, a quick disclaimer. This video is created purely for educational purposes only. It is not financial advice and should not be considered as a recommendation to buy, sell, or hold any investment. Please conduct your own research or consult a licensed financial advisor before making investment decisions. First, let's set the stage. What is the big picture for Singapore's economy? The outlook for 2025 is solid. Economic growth is projected at around 2.8%. This growth is being driven by strong demand from overseas, especially in a few key areas. Think of electronics, driven by the global hunger for AI technology. Think of modern services, like information technology, fueled by companies everywhere upgrading their digital systems. Singapore is a critical hub in these global supply chains. On top of this, there's a major regional catalyst gaining momentum, the Johor Singapore Special Economic Zone, or JSSEZ. This initiative aims to create a powerful economic corridor blending Singapore's financial strength with Malaysia's resources in land and labor. Industries like data centers, electronics, and renewable energy are set to benefit directly. This creates a long-term tailwind for companies in the region that provide engineering and technology solutions. Of course, no outlook is without risk. Global trade tensions could always disrupt supply chains, but the overall environment appears favorable for well-positioned companies. So, with that strong economic backdrop in mind, let's see how this plays out at the company level. We'll explore 3 distinct case studies from Singapore's small-cap universe. Let's begin with AEM Holdings. This is a classic, high-risk, high-reward turnaround story. So, what does AEM do? In simple terms, they are a global leader in testing solutions for the semiconductor industry. When a company creates a new, powerful computer chip for AI or cloud computing, AEM provides the highly advanced equipment to make sure that chip works perfectly. Now, 2023 was a tough year for AEM. The entire semiconductor industry hit a down cycle, and the company's revenue and profits fell sharply. However, the future looks very different. Analysts are forecasting a significant financial recovery, with net profit growth projected to be over 188% in 2026. This is driven by the explosive long-term demand for AI-related chips. Let's talk about its valuation. Based on past earnings, its price-to-earnings ratio looks high. But when you look forward, the story changes. A key metric here is the PEG ratio, which compares a stock's price to its expected earnings growth. AEM's PEG ratio is exceptionally low, at just 0.21. This suggests the market may not have fully priced in its explosive growth potential. Strategically, AEM is innovating with what it calls Test 2.0 solutions for next-gen devices and has successfully brought on several new customers, reducing its reliance on a single client. The primary catalyst is clear: the AI revolution. Now, let's shift to UMS Integration, a precision engineering firm that presents a very different profile, one of resilience. They operate in the cyclical semiconductor industry, which can be volatile, but they have a secret weapon: diversification. While their main business is making high-precision components for chip manufacturing equipment, they also have a strong and growing S-Space division. In 2024, when the semiconductor segment saw a downturn, the aerospace business grew by a robust 16% thanks to the global rebound in air travel. This diversification helped cushion the downturn and kept the company profitable. It's a textbook example of a smart strategic buffer. But the biggest catalyst for UMS right now is geography. The company is rapidly expanding in Malaysia. In the last quarter of 2024, revenue from its Malaysian operations surged by an incredible 299%, driven by a new major customer. With new production facilities in Penang now operational, this provides a powerful and tangible driver for future growth. And for our final example, we'll look at CSE Global, an industrial and technology solutions provider. If AEM is the high-growth turnaround and UMS is the resilient diversifier, then CSE represents the stable, well-managed compounder. CSE provides complex engineering solutions for the infrastructure, energy, and process industries across the globe. Financially, 2024 was a very strong year. Revenue grew by nearly 19%, but more importantly, net profit grew by over 63%. This shows the company is becoming more efficient and profitable as it grows. Their balance sheet is also getting stronger. The company's net gearing, which is a measure of debt, has decreased. This is a great sign of prudent financial management. CSE's strategy is built on two pillars: deep engineering experience and strategic acquisitions. They have a proven track record of buying smaller companies and integrating them successfully to drive growth. A key indicator of their future performance is their order book, which stood at over 672 million Singapore dollars at the end of 2024. This gives them excellent visibility into future revenue. So, what can we take away from this? The Singapore small-cap market isn't monolithic. It contains diverse opportunities for different objectives. We saw a high-potential turnaround story in AEM tied to the massive AI trend. We saw a resilient business model in UMS, which uses diversification into aerospace to balance out semiconductor cycles while capitalizing on new growth in Malaysia. And we saw a stable compounder in CSE Global, a company growing steadily through smart acquisitions and strong operational management. Each of these companies highlights the importance of looking beyond the headlines and digging into the fundamentals, their strategy, their financials, and the unique catalysts that could shape their future. We hope this analysis provided a clear and educational overview of the dynamics at play in this exciting market segment. If you found this breakdown helpful, please consider liking this video, sharing it with others, and subscribing for more content. And as a final reminder, this video is for educational purposes only and is not financial advice. Always conduct your own thorough research.